The Walt Disney Company just reported earnings, announcing Disney Plus gained 7.9 million subscribers in Q2 2022. This was after Netflix saw its first subscriber decline in over a decade. Netflix is forecasting a loss of 2 million subs in the following quarter, while Disney expects even larger growth in the second half of the year. In reaction to this positive news, the stock soared 4% after hours, only to fall back down and push towards new lows.
And it's gone.
What do you mean? I have $100.
Not anymore, you don't. Poof.
However, streaming is only part of Disney's diversified business model. In this video, I'm going to break down all the most important details from Disney's earnings report and share important news from their earnings call. My name is Zach, and you should leave a like and subscribe to the channel if you enjoyed the video. Disney CEO Bob Chapek stated, "Our strong results in the second quarter, including fantastic performance at our domestic parks and continued growth of our streaming services, with 7.9 million Disney Plus subscribers added in the quarter, and total subscriptions across all our DTC offerings exceeding 205 million, once again proved that we are in a league of our own." As someone bullish on the company long term, I agree with that sentiment. Streaming growth and domestic parks performance were quite impressive. But before I get into each of those, let's go over the top line financials for the quarter. Revenues for Q2 came in at $19.2 billion. This missed analyst estimates by $800 million, which is explained by a $1 billion reduction resulting from the early termination of some licensing agreements. This allowed them to move over content faster to their direct-to-consumer services. Adjusted earnings per share for the quarter came in at $1.08. That was an 11-cent miss based on some analyst expectations, but was a 2-cent improvement from Q1. Now let's look at streaming and entertainment, then discuss parks, and end with some surprising news. In total, the company now has 205.6 million subscribers across its services, Disney Plus, Hulu, and ESPN+. Disney Plus grew to 137.7 million, up 7.9 million subs from Q1. 4.2 million were from Disney Plus Hotstar, which is their Indian branded service. This has the lowest average monthly revenue per user, but is very important. Over the long term, India will serve as a key market due to its large population and economic development. Disney Plus Hotstar has the most dominant position in this region with over 50.1 million subscribers. Netflix only has 5.5 million by comparison. Domestically, Disney Plus grew 1.5 million subs, bringing its total to 44.4 million. International, excluding Hotstar, grew by 2.1 million subs, bringing its total to 43.2 million. Both of these have much higher monthly revenue per user, which is growing in all categories. ESPN Plus grew 1 million subscribers, bringing its total to 22.3 million. I was expecting this slower growth as they didn't have much new content in this cycle or the organic push of Monday Night Football on ESPN. Hulu gained 300,000 subscribers, bringing total subs to 45.6 million. This is a combination of a lower-priced ad tier, ad-free tier, and live TV package option. Hulu is monetized the best out of all their DTC services. Disney Plus has seen great growth so far in 2022, with 11.8 million in Q1 and 7.9 million in Q2. In the second half of 2022, the company has been projecting higher growth since they are hitting their full ideal content schedule. However, on the earnings call, the Disney CFO said that the rate of growth may not see as high of an increase since they've done better than expected in the first half of 2022. This is understandable. The company reaffirmed its guidance of 230 to 260 million Disney Plus subscribers by the end of fiscal year 2024. This seems likely based on recent performance. They also reaffirmed that they expect Disney Plus to reach profitability in the fiscal year 2024. Additionally, they teased new ways of monetizing the service, which we'll discuss later. Right now, Disney Plus and its direct-to-consumer services are growing but unprofitable. This is due to the large content spending that they've been strategically ramping up. Previously, Disney stated that 2022 will be the peak year of losses for streaming. Over the long term, this will change as the services continue to scale and are monetized. Luckily, Disney still has their highly profitable linear TV network business. business. This is a cash flow machine, but in a slow decline. However, over the next decade, we will likely hit a point where both are highly profitable, with the streaming services eventually overtaking and growing well beyond. It should also be noted that theaters are starting to come back strong. Doctor Strange and the Multiverse of Madness was just released and has done nearly $500 million of global box office in its first week. Billion-dollar Marvel movies are back. This highlights another one of Disney's key advantages, as they can monetize content to a high extent through traditional outlets prior to releasing it on their service. It's a powerful double dip compared to companies like Netflix. Throughout the rest of 2022, Disney has a strong content slate both on Disney Plus and in theaters. They have Obi-Wan Kenobi, Ms. Marvel, Lightyear, Thor: Love and Thunder, Star Wars Andor, Black Panther 2, Avatar, and likely much more. As I mentioned earlier, this is all only part of Disney's business. Now let's get to their parks, experiences, and products. Domestic parks had another very strong performance, with 2022 quarters still at all-time record earnings. Revenue came in at $4.898 billion, up $98 million from Q1. Domestic operating income came in at $1.385 billion, down $170 million from Q2. Still a very strong performance. However, international parks in Hong Kong and Shanghai have remained closed due to shutdowns. This is obviously not good, and it's unknown when they will return to normality. The consumer products division performed strongly as well. In their earnings call, they gave very positive statements about their parks business. They stated that per capita spending in domestic parks is up 40% from 2019 pre-pandemic levels. This is wildly impressive. Since guest attendance is still being capped, these parks have the potential to continue ramping up profitability long term. According to their internal data, attendance demand has been exceeding 2019 despite lower constraints. Now all parks and resorts in the United States are operating. They also see consumer demand remaining strong throughout the year according to all their internal metrics. So the parks business seems to be bouncing back strong. Other major news was that the company is going to launch a cheaper ad-supported Disney Plus tier later this year. That option will likely help with the growth and monetization of Disney Plus. Other services, such as Hulu and HBO Max, have seen that cheaper ad tiers actually generate a slightly higher revenue per user than the more expensive ad-free tier. Coinciding with this, I expect they will announce a Disney Plus price increase for the ad-free tier. On the call, they stated that they are bullish on the ability to raise prices long term. They also stated that the Disney bundle has been great for reducing churn. The success of the bundle gives them optimism for expanding this offering over time. Now that Disney has reported earnings, my full video on the streaming wars will be coming later this week. Subscribe to the channel and hit the bell to make sure you're notified. Also, more dividend investing videos are coming soon. Check out dividenddata.com and sign up for our Discord, where you can join a community of like-minded investors. Thanks for watching.